Hi clients and friends, Mike Brady here. This week I'm going to do my annual year in review and coming year preview. I'm going to spend a relatively short amount of time on the review because the real juice, the real excitement is what's in the future and as I see things. 2010 was kind of a volatile year. The first quarter was good. The second quarter was really bad. So 6 months ago, the markets were actually negative. The equity markets were actually negative. July was good, August was bad, and then September, October, November, December really kind of bailed out the year. So the S&P was actually in double digits last year, positive 15%. Most of your equity mutual funds were in the single digits last year. Of course, they weren't as much on the high, they weren't as much on the low, kind of in general. Bond funds were up for last year, particularly high yield or junk bonds were positive for the year. So it turned out to not be a bad year. I mean, actually a good year, although, like I said, the first 6 months of last year, things were negative. And then the second half of the year really kind of bailed it out. Looking back at my video from last year, about 12 months ago, let's talk about what I got right and what I got wrong. I'm very proud that I got most things right. I started out the video by saying it was going to be a difficult year. Well, that's kind of waffly. At least I was very specific on my recommendations, but difficult seems a little abstract. I talked about unemployment and jobless market for last year, and that's definitely what happened. I'm recording this actually on January 7th, and although the unemployment rate has decreased to 9.4%, a lot of that, as you look at the numbers, is people who have given up on and no longer being counted. So it's not like we have this wonderful job recovery at this point. I said that I thought commercial real estate was going to have problems in 2010. That's absolutely what happened. The big news for 2010 was all the problems that Europe has. And so I talked about European banks and how concerned I was. The countries, we call them the pigs. That stands for Portugal, Italy, Ireland, Greece, and Spain. And I think that the kind of the first layer of the onion was peeled off last year so that everyone could really see the real difficulties that much of Europe is having. Municipals, I said, were going to be a problem in 2010, and they were. They're going to continue to have a problem, in my humble opinion, in 2011 and 2012, and so I think I was right there. Commodities did well last year, and residential real estate was a real problem last year, continues to be a problem, and I got that one right. One thing that I did get wrong was I thought interest rates were going to increase last year, and they didn't. So that's something that I got wrong, but feeling pretty good that I got most things right. Now let's talk about 2011. I really do try to avoid the prediction game. The only thing I know for sure about 2011 that there's probably going to be some very good rallies, probably some ugly disappointment. My goal is to simply navigate it the best I can, hopefully provide some insights, make some money, manage risk, and achieve my clients' individual goals. Okay, it would be easier if we had a slow, steady bull market that lasts for most of the year, but I'm fairly certain that's not going to happen quickly or easily, but it sure would make everyone's life a lot easier. There's going to be some ups, some downs. What can we do to navigate it? I think it was President Harry Truman who said that he always wanted a one-armed economist. He needed one because the advisors that would come to him would say, well, Mr. President, this is our opinion on the one hand, but on the other hand, and so we always needed a one-armed economist. Well, I'm going to give you both sides of the coin here, reasons to be bearish, reasons to be bullish, and let you decide. But I'm also going to share with you what I'm doing on a very practical basis. The reasons to be bullish: the money supply and the credit aggregates are turning up, turning very positive, suggesting banks are starting to lend and firms are starting to borrow. That's a good thing. It's nice to have a supportive fiscal policy with the most recent low tax rate continuations and a 2% payroll cut. From a third reason to be bullish is we have a healthy corporation. If you look at the balance sheet for these corporations, there's an 8.7% profit margin, and that's well above the long-term average. Cash balances are very high, and so this is a good reason to be bullish, and I'll talk a little bit more about why I think that's a good thing. Reason to be bearish: this housing sector, the Case-Shiller Housing Index continues to show weakness in the market, and it could fall further. I happen to be in that camp. Bond risk: the Fed wants to keep the 5- and the 10-year yields down in order to encourage U.S. banks not to hoard the money and park it in treasuries, but rather to lend. And if the yields get too high, then I think a concern would be is if the Fed wants to do another round of quantitative easing. I think state and local cutbacks is going to be sort of the news for 2011, like Europe and the problems they're having was for 2010. That's a precursor to the problems we're going to have here in the United States. I mean, why? Because when people aren't spending as much money, there's a problem with joblessness. The sales tax goes down. People aren't feeling wealthy, so they don't want to vote on their raising their income taxes. As assessments for real estate goes down, property taxes that are the revenues for many state and local governments is decreased as well. So that does not bode well for municipals, does not bode well for all the state and local governments. One thing that I'll be watching is the price of oil. It's now at around $89 a barrel. If it increases, that will be a slowdown on the recovery, any recovery that may happen. Do I know if oil is going to go up or down? No, I don't. But I do know that it going up will be what would just be a drag on the economy. Now, some of my predictions: stocks will outperform bonds and cash. Because cash is basically 0%, that means that I believe stocks will be in positive territory by the end of next year. Is it going to be 4% or is it going to be 20%? I don't know. But I do believe that that will be a better place to be in general than bonds and on the sidelines cash. I think the U.S. as a market is going to outperform international, specifically Japan, Spain, and China. I think China, and I'm going to do this in a follow-up video sometime this quarter, is I do believe that China is a little bit of a bubble waiting to burst. But I do think that the international market indexes will not do as well as the U.S. market. The strong balance sheets that I talked about earlier, they're going to lead to increased stock dividends, increased mergers and acquisitions, some share buybacks, some business reinvestment that is great for the long-term vision. So I'm glad that we're able to put this cash to use. For corporations will hopefully put this cash to use, improving the value of their businesses, and that's a good long-term trend. The cash flows, I believe, for 2011 will go out of bond funds into stocks and stock funds. So that's one of my predictions. That's kind of what's happening right now, and I think that will continue in 2011. What I'm personally doing is I'm going to decrease significantly bond exposure in the portfolio. Particularly anything that's not short duration, but and definitely I want to not have municipals. I think that's something to avoid. I'm going to be increasing the large cap, the larger companies' exposure, and decrease in comparison to the mid and the small cap areas. I'm going to be watching the VIX, which is the volatility index. Right now it's very low at around 17, 18, and I think that when people are complacent, that's a very low number, that's something to be concerned about. So I continue to watch the VIX as an indicator of the overall market health. I still love biotech as a field and may buy a small percentage of that for a long-term buy, long-term hold for clients that it meets their objectives. That is within their criteria. So those are some of the things that I'm doing. That's some of my views of 2011. I've probably been talking more than my normal videos, but there's an awful lot to cover. As a matter of fact, I could probably sit here and talk for quite a long time to go more in depth in how I come to these conclusions and why I weight one concern or one positive more than another. And so for that, I would encourage you to give me a call, and we could I can talk your ear off on the phone. My name is Mike Brady. I'm a registered rep with QA3 Financial. My firm is Generosity Wealth Management. My phone number 303-747-6455. And you have a a blessed week, a blessed year, and you'll hear from me again next week with more thoughts. Talk to you later. Bye-bye.